Hi everyone, exciting market times. Let's do my weekly update, shall we? Well, this is a measure of valuation. Red means bad, higher the number, more overvalued based on price to earnings ratios. And as you can see, for yet another week, energy, oil and gas relatively undervalued. And that's a reflection of the fact that the profits they're making, the earnings side of the equation, is significant and the share prices haven't quite caught up to those levels. The financials, again, banks are still doing well, and you can see more of the financials still relatively undervalued. Doesn't mean on a week-to-week basis they're going to do well, because this is the performance over the past week, and actually there's been a sellout on virtually every sector other than really healthcare and some utilities. So you can see which ones have been rotating through, but they really don't have the legs when it comes to valuation overall. Another measure of valuation, price earnings growth. Energy, again, looking cheap. Pretty much the only overall sector that does look cheap. Let's look at the market and the Bellwether stocks as well. If we start off with the broader index and the S&P 500, what we find is it's hit that top level. I am going to try to draw I want to draw something for you here so that you can see it clearly. Here we go. That's where we are. Okay, and this is the top barrier. Now, I'm not saying it's necessarily going to go down here, but if it did and skidded along that top barrier for another year, we'd be down 14%. Really, for me to turn optimistic, for a risk-averse person to become more risk-neutral, we'd have to see a breakthrough on that upward barrier. Okay, so if you're risk-averse, you're still waiting. If you're more risk-loving, you're going to take that gamble early. And if you're risk-neutral, you're probably going to wait as well. All right? Where's Apple in all of this? If we look at some of the ones which are people's favorites, well, it's at this lower barrier, and if it continues along there, then you will have, in the next year, probably a 12% return. If instead it goes to the top end, you've got a 67% return. Yeah, that's where we are. Microsoft, company that I like, it's in the middle of its downward trending channel. Now, you're going to make a decision whether you think it's going to go there. If you're risk-loving, you will. If you're risk-averse, you're going to stay and wait for a bit longer. And if you're risk-neutral, you don't mind holding on to it, which is where I am at the moment, even if it's going to skid a bit lower. I'm not trading my investments and getting in and out every single week. Amazon did fall out from below that lower support, and this is what happens when a company does that. And I didn't expect it to do that. Having already dropped some 44% as it did there, I didn't expect it to then drop below that support, and very clearly. Now, if it goes back along this line, you're getting a 50% return. I'm still holding on to Amazon. It's a long-term quality pick, so I'm not too worried. These movements, I take a very pragmatic Warren Buffett type of view, even though it's down 50%. We're in it for the longer term. Meta, look at that. Now, showing this because it was down 77%. That's the projection. Let's see if it can continue above that run rate, which would give you a 340% return in about 2 years. It's certainly above it at the moment. Like I said, it could do this. As long as it stays along there, those are the returns. I'm not saying they'll necessarily happen, but that's where we are on it. Costco, one that, as you know, I like, and this is where we are on it. Those are the projections. PayPal has fallen, then risen, then come back down, and now currently it's even below that projection we had, which would have otherwise given us a 42% return, but you can see it's sort of below that at the moment. Am I worried? Well, PayPal's a longer term one. You wouldn't certainly have this expecting it to give you a bumper return in a week or a month or something shorter than that. Okay, so that's where we are on that one. Johnson & Johnson, another one that I particularly happen to like. Bear case, base case, bull case. You can see the numbers, 12, 4, -3. You might say, not enough excitement. Thanks, Alpesh. I'll leave it. Katera has fallen below that upward trend. Now, if you're risk averse, you take your money and run. If you're risk neutral to risk loving, you might say, yeah, I'll keep holding on for a bit longer. What worries me with this one is it does look a bit toppy. I'm not saying it won't necessarily rebound, but that move below is significant and quite deep. So like I said, the risk-averse people will start getting out some of their positions already, and the momentum certainly looks like it'll continue with some downward pressure. Okay, that's where we are on that one. Halliburton is still within the realms of what we expect. So really no action to be taken there. And if you look at the momentum indicators over here as well, not really much action to be taken. 81% is the projection if it continues along from where we got in, which was there, up to there a year from now. Marathon Oil, it's had that big dip, but it's still kept above it. If like Qatari, you're thinking, ooh, time to take some profits, then I would not blame you. Time to take some profits? Potentially. Time to get out completely? Might be a bit early. If you're risk loving or risk neutral, you might not get out completely yet. Okay, so that's where we are with that one. Occidental, similar kind of story. You can see it there. I don't think there's a big shift out of energy companies at the moment, so I'm not too worried for that reason. So happy to hold on to this one. And you can see the price projections there as well. Here we've got another one, Devon Energy. If you're risk averse, you might say, you know what, Alpesh, I'm going to take my money and run. Risk neutral, you might wait. Again, like the others, looking toppy, looking at some downward pressure. I think there's some profit taking happening across the energy stocks in the last few days of the year as they sort of book their profits and look to get their bonuses. You can see it there, but I'm not trading investments, so it's something like this unless I get a big dip below. But if you're risk averse, you say, why should I wait? I'll get out. Of course, then you've got the opportunity cost of missing that rise. That's where you are on it. Adobe I show each week because I want to show what it looks like when a really good company does have quite a significant fall, and it's forming a base, as you can see with these price rises. We'll see what's happening. I'm not holding it at the moment. I have in the past. I don't hold it at the moment, but it's more there just for educational purposes. Eli Lilly, where is Eli Lilly? Similar story. We're on track in this band. 40% returns are the projections. You can see how we've done them, where we've done them from. Okay, so that's where we are on that. Now, this was, of course, trade of the year for me. Who knew it was going to be sterling US dollar? I hadn't predicted that. When it was down here, I said it'll probably take 2 years to get to one spot, 22.50. In fact, it gave me that return in a far shorter space of time. Given that it gave me that return in such a short space of time, the issue becomes, excuse me, well, what do? Do you wait? No, of course you don't. You hit your targets, what you thought would happen, take the money. End of story. Fantastic. Great. United Health Group, I do own. We're at the bottom of that upward channel. I am expecting on a base case to get a 24% return in 2023. On a bull case, get a 60% return in 2023. Don't forget my campaign for $1million.com. Hope you like these updates. They're on Telegram. Look at the links in the bio. And I hope you found them educational and informative. Thank you very much.